Welcome everybody. Vielle's 9th of February 2018 Google Hangout. And remember, we're CPD accredited, so you can contact anyone at the office if you want to get a CPD certificate after our Hangout. There's a question which I will ask during the Hangout, just to make sure you don't phone up having just watched it for 2 seconds. The next thing to do is remember to watch us on YouTube, sign up on our YouTube channel, and you will get a notification every time we do a new Google Hangout. And then the next thing I want to tell you, we have very big news, because history in the making, because today is the first time that we will be doing a CPD Vielle Accredited Hangout, also on a podcast. So when you are on your way home, you can either listen to Ed Sheeran, the BBC News, or me. And if you have problems sleeping, again, the Vielle podcast can be downloaded and listened at your leisure. So that's the introduction today. Now let's see everyone who's here. Well, there's me, Neil Singer. Here's Richard Wolfred. We have Dale Henry.
Hello, everyone.
We have our man in Scotland, Graham Waddell.
Afternoon.
We have Anthony Ratcliffe.
Afternoon.
And we have Brian Bartaby.
Hi.
Right. I think I'm going to introduce the guests straight away, actually, before we talk about what's going on in the marketplace. I'll just give you a little bit of background. So this is Mr. Ratcliffe, who is famous for running syndicates through Ratcliffe's Chartered Surveyors. And I remember when I was a youngster, working at Jones Lang Wootton as it was, and every time a yellow piece of paper came around the office, you knew it was a letter from Anthony Ratcliffe offering a property for sale. It was famous, wasn't it? It was famous. They were always yellow.
Yeah.
And Anthony's going to tell us about how he syndicates properties so successfully when we come on to him later. He has been syndicating since 1991. He's closed, I think, 151. As at July 2017, he's returned 38.5% annualized returns. And since 2012, when it's all been cash, he's been producing 28% annualized returns. That's ungeared. So that's Anthony. And it's very interesting, I think, that we've got Brian on, who's going to talk about Proplend, because Proplend is new age. So asked Anthony, maybe, I'm not going to say old age. Brian's going to talk about Proplend. Proplend is an FSA authorized and regulated loan syndicating business, who has already organized many millions of pounds worth of loans online. And I think I'm going to leave the rest to Brian when he describes it later. So those are our guests today. We're very lucky to have them. Let's start off, if I can suggest, with a brief rundown of what's been going on in the market. So Richard, over to you.
Hello, everybody. Good afternoon. I'm just going to run through 4 transactions that we have been involved in the last few weeks. The first of which is a parade of retail shops in London Road in East Grinstead, which are let to EE, Carphone Warehouse, Shoe Zone and Waterstones, all with under 5 years on the lease. We actually offered each one as an individual investment, but sold as one property to one buyer for the total combined quoting price of £1.65 million, which equated to 6.4% net initial yield, and was acquired by a local private investor who exchanged in several days. So that was done last week. The second is an industrial ground rent investment in Aberdeen on the Bridge of Don industrial estate, which was underlet to Homebase on a short unexpired lease, which we quoted 5% on, £1 million, and sold to an English private investor at £1.1 million, equating to 4.5%. So very strong yield. Thirdly, we sold a leasehold multi-let industrial estate in Chelmsford in Essex on behalf of a bank for just under £3 million at 7.5% net initial yield. Interestingly, on this sale, we were employed as a backstop for the seller, who had a buyer knowing that they had to perform to prevent us from exposing the sale to the market, which they did. And finally, we sold a juice and trade counter investment in Wigan in Greater Manchester, which was let on a new lease with 5 years term certain, and was sold by click to purchase best offers, with 4 online offers being submitted, all above the asking price of 7%, and we achieved 6.25%, £150,000 over the asking price, demonstrating the strength of the quasi-industrial trade counter market at the moment.
Thank you, Richard. So there's some things that we've been... Thank you, Richard. That's some things we've been selling. We have a new feature at Vielle, which I think, Dale, you wanted to tell everyone about.
Yep, I'd be very happy to. So we have very recently announced a new client's dashboard. And what this means is that now when we are selling a property, a vendor will have immediate access to real-time activity reports. So they can see exactly the interest generated from our marketing. So the dashboard provides a real-time online data set. So a client can see all the analytics from their property's website. So this includes not only a high-level view of activity at singerviellesales.com, they can see statistics on emails distributed, opened, clicked, analytics for this specific property's marketing website, such as page views, new versus returning visitors, page views by device, and world reach. Plus, clients can view a schedule of interest in real time, showing who and how many parties are interested in their property at that exact moment in time. Also, if we're offering a property for sale by click to purchase, then the dashboard also gives the client access to all the transactional activity. So they can see if any parties have, for example, completed the online verification process to submit an online offer. They can see any click to purchase offers made. There's a full audit trail and all the transactional data is available. So basically, selling clients no longer need to ask or wait for an update. It's available at a click. So when we're selling, they've got exact knowledge of the market reaction to their property. So this means complete marketing transparency for clients now.
Thank you, Dale. I think that's really good, if I can suggest. In fact, one of the reasons we did this as a business is because sometimes when we're selling a property, a client may say, well, maybe there's not as much interest as you may hope. Well, the reality is that we can show them where in the world people have looked at a property, how many people have downloaded, how many people have opened emails, etc. So we've exposed it to the market very extensively, and sometimes the market is more enthusiastic about one property than another. And also it gives a real-time dashboard for clients, and I think the world is moving that way with transparency. The other thing which is new, which is what I just mentioned to you earlier, which is the client as well as the client area, is the podcasts. So you can either download, let's go search on iTunes, find Vielle, download and join our podcast channel, or you can watch on SoundCloud directly off our website, and you'll find a page on our website. So you can see we'll have everything listed, and you can see what topic might interest you, and you can be educated and earn CPD. And it's all a bit of fun as well. Graham,
Hello.
time to learn about north of the border. What's been going on in Scotland?
It's been a slow start to the year, but this week we've picked up 5 sales. So we're going to be very busy over the forthcoming weeks. Can't really say too much about them at the moment. A couple of flagship retail units, which will be really good to see how they go, and a couple of smaller retail as well. So no, it's been a slow start, relatively speaking, but it's going to pick up as well. And I think, as Neil knows, but we can't reveal just yet, we're bringing somebody else on board in Scotland as well to move it to the next level. So it's all good.
Yeah, that's very good. That's very exciting for us, actually. In fact, Graham is a real success story for us. We started working with Graham 3 years ago now. Graham, what was it?
3 years. 3 years.
Yeah. And I think it's fair to say Graham is probably now known as the man to go to in Scotland if you want to sell investment properties. I think that's true, isn't it? I mean, we are probably doing more volume in Scotland than any other agent I can think of. Is that?
I think so. Yeah, I think so.
So we are very keen to try and build on that. And if anyone watching is interested in working with us in, say, Manchester or Leeds or Birmingham or Bristol, we would love to talk to you to try and expand our network. Okay. Now let's bring in the guests. Anthony.
Yeah.
Anthony, I thought I'd give you the floor and let you explain to everyone how you got into your syndicating business and how it's become so successful. without giving away too many secrets, otherwise everyone will want to copy you.
Well, we worried about that for the first 7 years, and then after that we thought, you know what, come and join us.
Yes.
So we started this thing in 1990 as an idea born out of desperation, as many good ideas are, when the market was as flat as a pancake, and we were seeing all this cheap investment product that our clients just didn't have the appetite to buy, either because they didn't have the confidence or they didn't have the cash. And we were thinking, we've got to find a way that we can introduce a new source of client base. And I thought about it, and well, you know, in previous years, a lot of us had been quite interested in it. Sorry, my phone, sorry. I'd been interested in playing, but you didn't have big enough chips to sit at the table. So we thought, well, maybe there's a way that we can break down the unit size, we can bring in the new players, we just have to come up with some sort of structure to do it. So I went off to see my lawyers, and by good fortune, they'd been doing a lot of work for a guy called Dick Dusenthal, who set up Lend-Lease in Australia, and as a retirement job, came to live in the UK and tried to launch a REIT here, and they were the lawyers that he used. The Treasury at that time blocked REITs because of tax leakage here. They were too worried about it. So although REITs were operating then in Australia, South Africa, America, they didn't get off the ground here for many years. But the groundwork that these lawyers, Druces, had done for him, we were able to piggyback off it. We knew what we could and couldn't do. We went to see the FSA and said, this is what we want to do. And the initial reaction we had was, well, you ought to be careful here because collective investment schemes, you will come within the remit of FSA, which was the last thing we thought we could afford to do at that time. So talking to them and meeting with them, we came up with the structure they would accept, which skirted their requirements. Took us a few months to get it together, and we launched in 1991, meeting the criteria they imposed on us to build this business by word of mouth and recommendation, which was fine because that's the way we'd built Ratcliffes itself for the previous 20 odd years. And limiting ourselves to 20 investors as a maximum per property. That was fine as well, because I thought 6, 8 or 10 was enough. And then the last thing in the tail was that neither we nor any of the other advising professionals could charge any more to the syndicate structure than we would to a private client. And we thought, ouch, because a lot more work, we ought to be able to charge a bit more fee. And then I thought to myself, well, I'm not doing any business anyway. We might just as well have a go at this. And if we put our fee structure broadly in line with the long abolished RICS scale fees, which went out in '82, nobody could be too critical that we were being unfair on the fee basis. So that's what we did. We established it with that. First deal we did, we agreed to buy a shop for about £250,000, got 150 of mortgage on it, and put 100 in of cash with 10 shares at 10 grand each, just using family and friends to kick it off. We took in all the early ones, we co-invested, we took a share, and it flew. And when we realized that that would work so well, we might be onto something, it built from there. We then spent 6 or 7 years trying to build it quietly so that the big guys didn't pick up the ball and run away with it. And then when we got to about 6 or 7 years of establishment with it, I thought to myself, we actually need some competition because this subsector of the market, for it to have respectability, there need to be other players in it. And fortunately now there are. I mean, we've had some villains in along the years, but they've mostly disappeared now.
I wonder if they charge the same fees as you, because I've looked at some of these models online and the fees can be quite high.
You're right, but a lot of the ones where the fees are excessive are actually the FSA approved guys. I mean, there's the first rival we had, who I won't name, but it was a fairly well-known city merchant bank. 7 years after we'd started, launched a rival product. And the fee structure was rapacious. They were taking 6% up front of the investor's cash. They were taking a 25% profit share on exit. They were charging an annual asset value fee of 2% on top of what the managing agent would charge to actually do the management. We saw these sort of things being put out there. The strength for us, of course, was it's not difficult to be industry leading if everyone else is overcharging like that.
Yeah.
And basically, we set up, we did establish a very strong track record. In fact, I think we sold 122 syndicates before we made a first loss. So it was only the 123rd syndicate we sold where we actually lost some investors' money. All the ones before that had been profitable. But of course, the 2008-9 crash did hit us badly, particularly on our leveraged properties. And we had, I think we had 11 loss makers out of all the ones we've done. Most of those were leveraged, and 5 were so bad that actually the investors' cash was lost entirely on those 5. But overall, we've had, I think, 7% loss makers, 140, about 93% profitable. So we've the track record, I think, is quite robust, really. Since 2012. Yeah, sorry.
I just want to ask, because
Yeah.
a lot of people may be may not quite fully understand how you go about this. It's I wonder if for the people watching and listening, it might be useful just to explain what you mean by it or how the syndicate works. Because the thing about all syndicates is there's always a level. When I've looked at these things, the question that people often ask is control, fees, exit, when's exit, things like that. And I know you build up trust. You build up trust over time, don't you?
Yes, you do. But well, the first thing is that anyone interested has to register with us, and we have to put them through the usual CDD nonsense, right? When that's done and they're on our mailing list, from time to time they'll receive something. How we make it work is we select a property that we like, we agree to buy it, our solicitors will then get a contract on it, and from that point we will then put the syndicate details out, and we are normally full within 24 to 48 hours of syndicate investors who will confirm that they want to take a share. We have a minimum of 6 investors and maximum of 20, and typically it's 8, 10, 12, that kind of structure. And the size of the share is entirely dependent on how much we paid for the property. If it's a £400,000 property, then maybe the shares are 50k. If it's a 2 million one, then maybe the shares are 125, however it works out. And occasionally we will do half shares as well, when they tend to be slightly bigger numbers. The investor profile we have is interesting. We've got a couple of people on the Sunday Times rich list, and then a whole bunch of guys that work on the refurbishments we do of our high street properties. So our carpenters, the electricians, plumbers, etc., invest their money with us as well. So we have an absolute range of investors.
Okay, I've got a question for you. Question for you. What happens if you decide you want to put 10 grand into a syndicate, and then there's a call for cash because you need some money for a refurbishment or something? So what happens there? Is everyone obliged to pay their share? And my question is, what if they, for whatever reason, they haven't got the liquidity at the time to meet that obligation?
Right. Okay. Well, firstly, if we're buying a property to syndicate where I envisage a cash call in a couple of years' time when the lease comes to an end, or an event that will require some money putting in, we'll make that clear at the outset with the presentation. So when people confirm that they will put their 50 grand in to take the share, they also must confirm that as and when a cash call is made, they will stand for that as well. Then, having said that, you might have an event 2 or 3 years down the line when somebody who thought they could put the cash in finds that they can't. We've had, I think, 2 instances of that in all the years we've been doing it. And in each case, we've resolved it by them selling the share to another investor in the syndicate who's taken that share on and then provided the cash call that was required there. Most awkward one we had recently was where one of the investors unfortunately died, and we were making the cash call right in the middle of the probate period, and we couldn't get the cash released. We actually covered that until they sorted themselves out. But you know, so we all want to find a way to get around these kind of things. But the other thing too is that we have a lot of liquidity. We have a strong liquidity with them in that sometimes death, divorce, some event, somebody needs some cash and they want to sell the share mid-term. That's not a problem. We've invariably got the other investors who one of them will be very happy to double up, take the share on because it's midway through the investment strategy that we've got for it, and we can normally return the cash in 10 days. So we try to match the liquidity almost to, you know, what the stock market used to be. It's much quicker than obviously direct purchase.
Yeah. Have you thought of linking up with one of these modern online syndication businesses? And because it seems to me you've got such a great track record. You're the first who did it. You could expand your business enormously if you, I'm not saying, don't get me wrong, it's a big business, but I'm saying if you wanted to, if you decided that's what you wanted to do, you must get people knocking on your door saying, come on, Anthony, team up with us. It must happen.
Yes, we do. We do. The main point is this, that the problem we always have is not actually clients, it's properties, right? It's very, very hard to source the properties we need that have the profile that we need that can deliver the returns that we want to achieve. And by being a relatively small business, we have the luxury of control. And when I don't like the market, I don't play. Yeah. We were out of the market for 2 years, 2010 to 2012. We didn't buy a thing because I didn't like it. It was catching a falling knife. And then 2012, we put a toe back in the water and we bought something which we happened to have developed 12 years before and sold. So we knew it inside out. We bought it back. Specsavers in Devise have restructured the lease and then turned it on again. And from 2012, we've been back buying, but it's all been cash. We've done no leverage plays because money's impossible to get within the time scales that we need to do our deals. If you're selling something to me, you want me to sign it and exchange a contract in 10 or 15 working days. Go to the bank and tell them, can you meet that time scale? We all know that's, you know, you need 6 months.
Yeah, we don't.
It doesn't work.
Yeah, we don't sell it. I have to say, as a business, we sell very, very little to people who have to finance. It's just not worth the aggravation anymore.
Absolutely.
It's a shame the world's gone that way. Okay, anyone got any question? Anybody got a question for Anthony? I've got one more, but I'm going to look if anybody else has got anything. Anything?
I do.
Okay.
Hi, Anthony. It's Richard.
Hi. Hello, Richard.
In terms of turning over your properties, is it discretional, or you have a specific period of time in which you hold them to do your asset management initiatives and then sell them on? Or
yeah, I mean, when we put the deal together and we present it to the clients, we'll present the strategy, you know, and we'll say this property's got a lease expiration in 3 years' time or a rent review or whatever, you know, and we envisage an ownership period of whatever it may be, right? And then, of course, events may accelerate that or may decelerate it, depending on state of the market and what you manage to do with the property. But we give them an approximate time frame as to how we see the thing going. And we rarely look to own something more than 5 years. I mean, we do have stuff that we've had many years, but generally speaking, we're looking at a 2 to 5 year turnaround with what we do.
Thank you. Thank you. And in terms of the sectors that you buy, and obviously I know that it's very much retail focused. Has that changed in recent years? Have you diversified into other sectors?
No, Richard, I'm too stupid to be able to do anything else. So, you know, retail is what we trained in. I mean, I'll buy the odd office if it's a no-brainer, single tenant government type stock. We'll pick one of those up when they in a time when offices aren't the flavour of the month, you know. You know, so we like to buy in a contrary way. I don't do industrial because I don't understand it, and I especially don't understand the yields on industrials at the moment. Seems to me lunacy, but there we are.
Agreed.
Not particularly having noted what the yield you got on the thing that you were talking about earlier that we sold.
Quite right. Yeah.
Anyway, there we are.
All right. Anthony, that's great. I've got some other questions for you, but let's bring in Brian. Is Brian? Hello, Brian.
Hi, thank you very much for the invite.
It's nice to have you. I'm going to show everybody your business, first of all. Let's find your business on screen. There is Proplend.
No, that's mine.
Oh, there's Proplend. Yes, you were. There was ads. There's, if anyone wants to look up Anthony Ratcliffe, there's Anthony's business. This is Proplend, which is slightly different, I would suggest.
It is. I mean, there is a lot of similarities. The main difference being that, well, similarities in the fact that I sort of founded Proplend under the same sort of reasoning that Anthony did. It was the frustration of I'd been raising finance for property investors and developers for about 13 years. I'd watched from the coalface, sort of 2007, 2008, when the world fell apart, property market fell apart, and the funding market fell apart. And watched, however, and repositioned themselves. So we had a lot of mezzanine funds who'd raised money, who turned themselves into stretched senior lenders and sort of moved into the residential development side. There was a huge amount of money, institutional money, went into commercial real estate debt funds. So people like Aviva, AXA, L&G, M&G, but they raised sort of £1 billion. They had to write tickets that were £50 million minimums. And there was a large sector of the market, which was the sub £5 million sort of commercial investment side, which used to be serviced by probably 50 odd banks, building societies, foreign banks, who had literally just vacuumed from that space. And there's about sort of 40 billion, depending on whose numbers you believe, of sub £5 million commercial debt that needs to be refinanced to get in the next sort of 2 to 5 years. And the 60 odd or 50 or 60 odd building societies who used to bank the building societies who used to do it, we're now down to probably about 12 people who are actually who are actively servicing that market. And as you said, if someone turns up at their bank or building society, asks for a loan against an investment property, it potentially takes them 6 months to actually to get a no, or potentially get a yes. So I saw it out of a frustration. Peer-to-peer lending.
Can you give us can you give everyone a rundown of how it works?
Yeah, absolutely. So we're what you call we're FCA regulated. We're an alternative finance or peer-to-peer lending platform. So what we do is we match borrowers' demand for funding with lenders' demand for income. So if a borrower comes to us with a loan requirement, we'll look at that loan requirement hopefully in the same or better way than any bank would. We meet the borrower, we visit the property, we conduct our own internal due diligence on the property. We instruct third parties, so we instruct third-party surveyors, we instruct third-party legals to do either valuation reports or legal reports on the property. And we package that up and we present that to our lenders via our platform. We price the deal or the risk on the interest or the interest rate on a whole loan basis. So a borrower might be looking for let's say a 75% loan to value loan. We would price the interest on that, and then we turn around to our lenders and we split the loan in up to 3 loan to value based tranches. So in a very similar sort of way that gets done with property finance just now, where you might have a senior debt lender, a junior debt lender, and a mezz lender. So we have a tranche A, which is 50% loan to value, tranche B is 65% loan to value, tranche C is 75% loan to value. And if we price the whole loan at, let's say, 6.5% for the borrower, what that might mean for the lenders is tranche A, you would earn 5.5%, tranche B, you'd earn 7.5%, and tranche C, you'd earn 10%. So what we do is we turn around to the lenders now, we distribute. What technology allows us to do is distribute the opportunity for them to invest in the loan to a vast number of investor or lenders throughout the UK. The minimum investment is £1,000. So an investor can not only choose or pick and choose which property they want to invest into, but then they can choose which part of the capital structure they invest into and the returns that they're going to get off the back of that. It's fixed rate lending. It's generally between anything from 6 months to 5 years. Our average loan term at the moment is about 21, 22 months. Average loan to value on the property is probably about 59%. And at the moment, we're turning anything from sort of 7.3% in our tranche A, up to about 11% in our tranche C.
Can I ask you, if I came to you with a property I wanted to finance, what's the timing? I've got two questions. What's the turnaround in terms of timing? And two, if you go to a bank, they ask you for an arrangement fee, don't they, in order to take it then to the investment committee, the loan committee. Yeah. Do you do the same sort of thing?
Okay, so in terms of timing, we want to try and get this down to a sort of a 4-week turnaround. We can generally do 90% of the work well within that time frame. So we can generally make a decision within a couple of hours whether it's something that we think is worthwhile pursuing. We can have a decision in principle out to the borrower the same day. We can instruct valuations quite quickly, and valuations are getting done quite quickly at the moment. The legals are what tends to take the time, and that can take anything up to sort of 3-4 weeks, and it's really depending on the borrower's solicitor and the quality of the information borrower solicitor supplies and how quickly they supply that information. So our target is to get it down to a sort of 4-week period. And the second point was arrangement fees. We do charge the borrower an arrangement fee, and that fee gets charged once the loan's fully funded. They then are due to pay us the arrangement fee, and it gets deducted when we physically draw the money down to the borrower.
So you're a bank. I'm trying to understand. I'm trying to see what's the difference to being a bank. You are a bank.
We're not a bank, and the difference being we are not. So it's not Proplend's money that is getting lent. All the loans are split into £1,000 loan units. And each one of those loan units creates a loan contract, and the borrower and the individual lender's name on each one of those loan contracts is a direct contract between the borrower and the lender. So it sounds horrendous that £1 million loan would have 1,000 loan contracts, but again, that's what technology can do. You can make that a very, very simple process. So the borrower can have one user experience of signing a single contract, and what that does is that signs all the loan contracts in the background. So there's individual loan contracts between borrower and lender. Is not the lender putting the money into Proplend and Proplend giving Proplend writing the loan to the borrower. Physically, the money comes through. We run our own client money accounts, so physically the money comes into our client money accounts. We can then control that and move that as a loan, as a lender makes an investment, or as a loan gets drawn down to the borrower.
What point is an investor committed?
So some platforms run a sort of auction process. Ours is obviously a fixed rate, so there's a certain amount of loan available. And when they make the commitment at that point to invest their money, we know we've already got their money sitting in our client money account, so they're committed at that point. The only reason that the money that transaction might not go through would be if a loan didn't get fully funded and we'd return the money to the investor. To date, that hasn't happened. And the second will be if something happened between the point the investor makes the indication that he wants to lend to actually drawing down the loan. If something came out of the ongoing due diligence that would happen at that point, that would stop us doing the loan.
Okay, interesting.
In addition, we've got a secondary market. So there is it's a fairly liquid secondary market. I mean, this morning, just to give an example, we had a £500,000 loan transaction was transacted between two of our lenders on the secondary market. So as any individual lender hasn't had to wait longer than 3 days to get full liquidity for any loan part that they've owned. So it's a very liquid. We've got a very liquid secondary market which investors can use. We've built it for their use. We can't guarantee it, but it's there for their use.
Did someone say they had a question?
Yeah, I did. You've got £1 million loan. How many individuals would be behind lending into something of that amount?
It could be 1,000, or it could be one. So about 2 months ago, we had a situation where we put I think it's about an £800,000 loan on the platform, and it was filled in 10 minutes. And we sat back and thought, that's fantastic. We've done an amazing job. Everyone should be happy. And what ended up happening was a lot of lenders called up to say, I was in a meeting, I was on the train, I was on the car run, I was doing something, I couldn't get I couldn't get on the platform to actually make the investment. So what we ended up having to do was we very quickly that day sat there and decided, right, for the first 24-hour period that a loan goes live, we're putting a maximum cap that a single investor can invest into the loan. So it means that now, the last loan we did, I think we had about 140, 150 investors made up that loan. And then after the 24-hour period, the cap gets lifted, and then we can have people who can come in and take larger amounts.
Interesting. Yeah, thank you.
I've got a question. Does the lender have to sign anything? Do they have to sign a loan agreement?
So the loan agreements get signed between borrower and lender all electronically online. What we still have to do that we can't do with an electronic signature is the security documentation. So there is a legal mortgage, there could be a debenture, there might be a personal guarantee. Those all have to get signed, wet signed by the borrower. And we also have our own security trustee company. So because you can't obviously split security across 150 lenders. So what we do is we have a security trustee company that enters into the security documentation on behalf of any lender that holds a loan part within that loan.
So, okay, so I send you my £1,000, I'm committed, but I still have to physically sign.
No, so the point that you commit online is the lender making their physical signature.
Sorry, so that's a physical. Okay, so I'm signing when I send you my money and I accept that I'm going into the loan.
So you actually have to go on. You have to log on to the platform, and you have to go through a transaction process on the platform where you agree to that you're entering into this loan contract with the borrower, and at that point you're committing yourself to do that. But on the side, we separately arrange all the security documentation, and that's wet signed by just our security trustee.
Oh, so you don't have to send out 1,000
no.
This.
No. So that's where technology is incredibly efficient. So the borrower can sign 1,000 loan contracts by picking them all up into one group and signing the whole lot in one go.
When you say, I mean, listen, I'm very into electronic signatures, as you can probably appreciate because of what we do.
Absolutely, yeah.
How do you sign it electronically?
So it's literally just by the click of a button.
That's interesting. And that because you've accepted terms, so that's that's a simple electronic signature.
Correct. Yeah.
Okay. What we do is we use in our click to purchase business, we use advanced electronic signatures. We abide by the EIDS regulations, and I think I don't know if the same thing applies to the signing of a mortgage deed.
So a mortgage deed has to be wet signed, so they're not signing the mortgage deed; they're signing a simple loan contract.
Okay. Well, it's interesting because there's a topic that I was going to talk about later, which relates to the government who are looking to change the rules in relation to digital signatures in relation to the property industry. And that has taken quite a step forward in the last week. So I'll come on to that later. But I'm always interested when people are doing things where they're signing online. Because it's not easy. Because it's taken me a long time to manage to do it and get it right. And there's a lot of people probably haven't done it simply because it isn't easy. What would you say your competition is like in the market?
So we're probably, a lot of the alternative finance platforms have tended to go into the residential development or residential bridging space, primarily because it gives investors higher returns. We've gone down the more, hopefully slightly lower risk end of the scale, which is sort of commercial investment property. There's a property, there's income coming in. You can see where that income is. The income's documented. So we probably compete with people like Aldermore and Shawbrook as a traditional lender, and a couple of platforms would be someone like maybe Assets Capital, or in some cases Rate Center on the commercial investment side.
Very interesting. We need to talk, you and me. We can, because we could bring this into our online mechanism, I think. Anyway, anyone got any questions? I've got a few more.
I've got a question. The obvious question: Do you lend in Scotland?
I thought that might come up. We have been getting a lot of. So we set it up originally so that it's England and Wales only. I'm Scottish, so I should be lending in my home country, and it's something we're looking at, and it's coming down to legals and putting different legal documentation in place, which we haven't done yet, but it is on our roadmap.
Good. Yeah. Well, Neil. There's a whole other podcast to talk about electronic signatures in Scotland, Neil, isn't it?
Yes, it's not so easy. Let's put it that way.
Not yet.
For reasons I won't go into. Okay, that's great. Look, anyone got any more questions? I've got a couple of things to throw open to both Anthony and Brian, if no one's got any particular question. No? Right, I can ask you both. Right, you love this one, Anthony. What is the impact of the new anti-money laundering regulations on your businesses?
Fairly devastating, I suppose, in that it's unworkable and it's impractical, and everyone's trying to get their heads around it. And even HMRC, in December, when I had an interesting meeting with them, admitted that they'd not been able to publish the guidelines to legislation that came into force on the 21st of June, because they were still getting too many questions and queries, and people were saying, challenging aspects of it. With your auction experience, how difficult it actually is to meet what they originally drafted in the fourth money laundering directive.
Yeah.
And it's a nightmare basically, and it's unworkable, and like many of these things, drafted by bureaucrats who don't actually operate in a real marketplace and understand how business really has to be conducted. And they're making our lives worse and worse and worse with this stuff. The latest is the Data Protection Act, the new draconian one that's just coming out, where if you get it wrong, the fine could be up to 20 million euros or 4% of your annual turnover. I mean, it's just nuts.
Yeah.
More and more of this.
Yeah.
More and more of this stuff.
Has it affected you at all?
So obviously we've got a lot of clients that we need to complete anti-money laundering on both the borrower and lender side. We try and use technology where and when we can. So we have a fairly reasonably slick process that people can go through. But there are times, obviously, when you have to come offline and do things the sort of traditional way that we've always done them. I agree that they are extremely difficult the regulators are extremely difficult to work through, but unfortunately they're not things that are about to go away, and I think they'll only get worse. And again, GDPR is we're going through a process at the moment of doing our GDPR audit, and then looking at what we do and how we do it and what we have to change in order to stay compliant within the regulations. And even some of the consultants who are supposedly the experts on what GDPR is are still struggling to tell us whether we can or can't send this email out and who we can send it to.
Yeah, GDPR is also there's another nightmare. It seems to me that a lot of rules are written, and you brought that in, Graham, in relation to Scottish electronic signatures. Rules are written by people who don't actually understand the impact of what these rules are going to have on their industry. And the GDPR is very strange in one aspect. And just to touch on it very briefly, as people will know, I'm fascinated by the whole blockchain industry that is arising. And the whole point about blockchain is that a record goes into a database which cannot be changed and is therefore reliable going forward. The point about GDPR is that you have to allow people to request of you to delete their data, but you can't delete data that's gone into a blockchain ledger. So, in fact, I spoke to my lawyer about this, and they said I'm not the only person who's raised this with them, and no one knows the answer. So I think the problem is there are these rules coming out, and no one really understands the implications. And I have to say, some of them really aren't thought through clearly. And in fact, on a property which we sold last year in June, when just after the new anti-money laundering rules came out, we as agents have an obligation to check the buyer, the buyer's representative, and the seller. But we have a greater obligation than the lawyers. And the problem we had on this particular deal is that the lawyers didn't understand the regulations as much as we had, because we looked at it in such detail, and we had this logjam in this deal. because now it's moved the obligation on checking buyers and sellers to the agent to a higher level than it is with lawyers. So the whole thing's a bit cockeyed, in my opinion. I think everyone agrees, yeah?
Here's an interesting one. So under the 4th Anti-Money Laundering Directive, we're required to refresh the documentation from time to time that we have on our clients. They may have been with you 30 years, but you still have to ask them to send the passport yet again, because the one you've got a copy of is a couple of years old or something. So we'll do all this because we're required to do that. Then you've got the Data Protection Act coming in, where we are obligated, if someone requests it, to erase their data. So any syndicate investor with us on whom we hold personal data, should they decide they'd prefer us to erase it, means we couldn't offer them a syndicate investment after that, because we would then be in breach of the anti-money laundering regulations. I mean, you couldn't make it up. It's just nonsense, the whole thing.
Yes.
Similar sort of story. We had so obviously when a loan gets repaid, we email all our lenders to tell them the loan's been repaid and we put the money back in your Proplend account, and if you want to withdraw it or reinvest it, you can do so. And a client sent an email saying, what's happened with this loan? When's it paying back? And we said, well, it paid back last week. Why didn't you send me an email about it? And we said, well, because you took yourself off the email list and decided you didn't want emails anymore. So you can't keep everyone happy all the time.
Yeah. Okay, let's move on. I've got a few more topics I wanted to discuss, which I thought everyone can shout and give us their views as we go along. There's a couple of news topics I wanted to mention. Right, the first one is, let me share a screen with everybody. This is the first. The first one is here. The 10% price cuts and transactions tumbling as agents prepare for tough market. This was a headline in the Estate Agents Online a few days ago, and it's according to Home Track, and they are saying that transactions volumes are down 14% on a year ago, and today's average discount on an asking price is either 4% or up to 10% in London. So it's quite interesting where the market's going. I mean, I think it has an effect on our market in the commercial sector. What does everyone think about that?
Well, I'll tell you what a long retired lawyer told me when I used to work with him at the start of my career. He said, if you watch the respective markets, when the residential market crashes, the commercial market follows a year later. I just throw that into the mix.
Well, that's actually been my experience throughout my career. However, we've seen at Vielle, I would say the converse, because as legislation has made it so difficult for private investors to hold residential property, a lot of residential buyers have moved into our marketplace.
Correct, yeah.
I mean, the problem is that they're not. The problem is they don't actually necessarily are familiar with the entities that they're buying or buying into, and maybe they should be buying into funds. But we've certainly seen a lot more private investors come into our marketplace. And Graham, in Scotland, you've had, I think most of your buyers in Scotland have been private, haven't they?
Well, the majority of the buyers that we've experienced in Scotland are actually from England. There's a real lack. I don't know whether there's a lack of money up here or there's just people are too reserved or what the story is. But the last 6 things we've sold, 5 have been to English investors and 1 to an Irish investor. And that's fine. Long may it continue. It doesn't matter to me because we've got access to these guys. But I think they see, you can call it cheaper, you can call it better value. They definitely see better value in Scotland on like-for-like assets compared to down south. And not everybody wants to invest in Scotland. And for some reason, I don't understand why, but that's just them. But yeah, it's better value. But certainly the housing market in Scotland seems to be pretty buoyant at the moment. But it's a bit like what follows. I mean, once it happens in England, it'll then follow in Scotland. But it's just a bit of a time delay on many things.
There was an article a couple of days ago as well that I think it was the investment into the buy-to-let market in 2017 was down something like 90% from the number that had been put in 2015. And again, I think that sort of follows your point. There are a lot of buy-to-let refugees, that are heading across to the commercial property market that have either are selling down their buy-to-let portfolio or aren't increasing their buy-to-let portfolio when they'd like to, but are actually moving across to commercial now.
Yeah, yeah.
Neil, was that home track report you referred to? Was that referring to London?
No, it was referring to, it was throughout the country. It was saying that the actual discount on asking prices was the greatest in London. In fact, if you were to go and to read all the various reports, the London market has definitely hit a barrier. But if you look at the markets in, say, Birmingham or Manchester, those markets are seeing the positive effect of people preferring to buy in those areas rather than London. I think my personal view is that the worst thing that's affecting the London market is the government Help to Buy scheme. I think it's a complete disaster, and I think there is a bubble is going to pop on that, because I remember going into an estate agency in Islington a couple of years ago, and just after the laws had changed in terms of the tax, where you couldn't offset at a higher rate on a residential investment, and I said to this estate agent, so how many of your buyers are investors? And he said 9 out of 10. So I said, well, why would anybody buy a property anymore? Because there's no income return. And he said to me, well, they'll be buying for capital growth. And I said, yes, but if there are no investors and there's no income return, there isn't going to be any capital growth. And I think the market, therefore, the result is simply supply and demand. Those investors have gone. So now you've got you've got flats for sale at, I don't know, £500,000 in East London, and the government are lending you enough money so the first-time buyers can buy these properties. But really what they're doing is they are artificially inflating the value of those properties. Mm. And you can't, as a second purchase of the same property, get the same loan from the government. So these people who've bought a property with this loan from the government to help them afford to buy a £500,000 property, when those people come to sell it, the buyers, well, first of all, the investors aren't around, and secondly, an owner-occupier can look at that property where there's no government help on it, or a new property down the road. Well, they're going to go to the one down the road. So I think people are going to get trapped in their properties. I think it's a disaster. So that's
negative equity will follow, won't it?
Well, I just think
it's almost certain.
I think people will get trapped in their properties. Anyway, that's more good news.
More cheery chat. Yeah.
More good news. But I don't think a hangout at the moment would be right unless we brought in one of my favorite topics. Let's talk about Bitcoins. Now, here's an interesting thing. Have I showed my green? There's the graph. There is the graph on Bitcoins. And you can see that not long ago, Bitcoins were touching $20,000 and they've crashed down to 8,000. Now, I remember the dot-com boom a few years ago when people were talking about buying shares. You'd go to a dinner party and everyone would say, oh, must buy Affinity Internet. Why? I don't know. But I'll buy them. And it's exactly the same thing. And you've got people, well, a few weeks ago maybe, saying, oh, I must buy Bitcoins because everyone else is doing it. And you knew something was going to happen. But actually, there's a real reason, I believe, why this crash has occurred. First of all, is I would say my view on Bitcoins has changed dramatically. 6 months ago, I would have said to you that I think cryptocurrency is going to grow and grow and grow. What I've realized in the last few months is there is no way the governments are going to allow it. And the governments control things. And whilst the idea behind cryptocurrency is that it's unregulated and there's no one actually taking control of the process, the governments are just not going to allow this to bypass them. And as a result, you've got in South Korea, there was a clampdown on cryptocurrencies, what's known as ICOs, initial coin offerings, which is a way of raising money by taking money from people who own cryptocurrency. China clamped down on it. I think there's been various announcements by governments in recent weeks, and that's why Bitcoins has probably crashed. Plus, the reason it's such a volatile market is the majority of value, and I think it's something like 95% of the value of Bitcoins is owned by a few people who got in very early. So it isn't a true currency. So my view's completely changed, actually. Anyone got any Bitcoins? Graham?
No.
Brian, you must have some Bitcoins.
I do, yeah. Primarily because I was at a conference years ago and someone was explaining it to me, and they literally said, "Give me some money, give me your phone," and they put some Bitcoins on my phone.
Oh.
I still got those. So I have been following it. I think there's some very interesting uses for Bitcoin and the underlying technology, sort of blockchain technology. Obviously, what you guys are doing with it, and there are other sort of coins out there which are actually being used for a real purpose, like for facilitating foreign exchange transactions. So I think that is very interesting. And I remember reading about a month ago in the paper that someone had gone to buy or to get a mortgage for a house, and the mortgage lender asked them where their deposit was coming from, and they said, "Well, I made money trading Bitcoin or cryptocurrencies," and the bank wouldn't accept that as a legitimate form of them putting money into for the deposit of their property. So,
because they've been trading Bitcoin?
Because they didn't see that as a legitimate way of making money somehow. They decided that they weren't going to allow them to use that money to be the deposit for the house. So there's some sort of irony in there somewhere.
That's a bit strange.
Yeah,
okay, so I've got a question. Okay, David England has asked, how many Bitcoins have you got? I don't mind telling you how many I've got. I've got about 50 quid's worth. Is it more than 50 quid's worth? It must be if you bought them a few years ago. You can just say,
it's got lots of 0.00s in it.
Okay, all right. Yes, but I do think it's quite interesting. We can talk about ICOs if people want to. I'll talk about that in a moment. Right, my friend Stephen Michelle's got a question for you, Brian, about your business. He says, what happens if a borrower defaults on the loan?
So the same would be, say we go through the same process that any sort of bank would go through. So we generally, when a loan is drawn down by a borrower, we'll take between 3 and 6 months interest as an interest reserve. So if the borrower then pays interest monthly, and if they miss an interest payment, we're onto it very quickly. We can start following up with them. If the loan goes into a period where it actually goes into a full default, then we have the same rights through the mortgage contract or through the legal mortgage that we can step in, take control of the property, appoint an LPA receiver, and potentially sell the property in order to regain or recoup the funds to repay the lenders.
Okay, see, interesting you should say that. I've heard that you mentioned earlier about some of the competing companies were doing more high risk lending to residential developers. I've heard that some of these tech businesses are now calling in receivers because some of these loans haven't turned out so well. So
yeah, there's a lot more can go wrong in a residential development transaction than can go wrong in a commercial investment transaction. And if a residential development goes wrong halfway through it, then it's a lot of management time and effort to actually go and work that out, bring new contractors in, make sure the warranties were passed over correctly, get new quotes for rebuilding, finishing off the build work, and actually getting to a state where you've got an asset that you can sell. Our worst case scenario would be a tenant goes bust on a borrower. So what we're left with either an empty property, which you can sell an empty property, maybe not for the same value, but you can still sell an empty property, and or you can release that property and try and sell it with a new tenant in place.
Yeah. I suppose, can you equally, if the people, can you equally offer in any way offer the property or extend the loans from the people who've already entered in to this syndicate?
So we can't. So ours. So we can't use the term syndicate. They're individual lenders making loans to the borrower. And what we have done is a borrower has come to the end of their loan term, and they came back to us and said, "Look, we'd really like to refinance with you again. It's been a good experience. We've gone to the bank. The banker, we know the bank's not going to refinance in the time frame that we require. We thought we'd get a cheaper rate out of the bank, but they actually we're not. So can we just refinance it on your platform?" So what we do is we can't extend the loan because the way the structure is set up, what we do is we just have a whole new loan facility, and so it's almost refinancing with potentially some of the same or some totally new lenders who come into that loan. And the proceeds of that new loan will then redeem the original loan that the borrower has.
Okay, interesting. Anthony, Anthony, looks like we found you a source of funds.
Well, we'll certainly have a private chat afterwards. It would be quite nice to return to the happy days when we used to leverage things as opposed to do them for cash. Because the problem with cash is basically, we probably ran out of oxygen at about 3 million quid an investment, whereas when we were leveraging the days pre-crash, I think the biggest win we did was 26 mil, so it's a different world that we're working in now. On the other hand, our investor profile, as they age alongside me, are more comfortable that we're not leveraging and they're getting income to live on in their dotage. So it has its positive sides as well,
Okay, so right, so we've been online now for an hour. Thank you. And I don't know if anyone's got any particular topics they would like to cover, but we normally sign these things off after an hour. Has anybody got any particular topics? I've got a few, but I can save them for the next hangout. Don't.
Well, we had a rant. I had my little rant about the MLR thing, didn't I? So I've done that.
You've done very well. Yes, you've done very well. We're going to edit that. We'll edit that bit out maybe for the podcast. Okay, so
question.
Yes.
Just out of the group who are here, have any of you heard of the Innovative Finance ISA?
The innovative.
Heard of what? Sorry, heard what?
The Innovative Finance ISA.
No,
Yes.
I haven't.
Yes, I have, and I've been doing some work on it, Brian. That's why I want to chat with you afterwards.
Okay. So there's now a sort of, although everyone normally thinks there's just two ISAs, cash and stocks and shares, there's now also an ISA called an Innovative Finance ISA, which you can use your ISA subscription either for this year or bring ISA subscriptions across from previous years, and then use that money to lend into qualifying investments, of which things like, so Proplend is a HMRC approved ISA manager, and we run our own ISA, which gives us access to about 670 billion pounds of cash sitting in cash ISAs, which last year earned about 0.8% as an average return. So things like that actually help make our business look more mainstream, but it's also opening up a whole new range of potential lenders to us, which will in turn help commercial property owners and their ability to borrow money.
So what you're doing is you're opening up the market to the private investors.
Yeah, our minimum investment's £1,000, so they can either use their cash out there, hard cash out their banks, or they can use tax wrappers, which maybe they've already put money into and aren't happy with the returns they're getting within those tax wrappers.
Yeah, you see, I take the view that the technology of marketing things online and then executing online is the potential is so huge. You can touch anybody anywhere in the world. I wouldn't profess to be an expert at how you transfer money from Australia to the UK in terms of regulations. There must be ways around this, but your marketplace for finding people who want to lend and join into your ISAs or directly, the marketplace is actually huge. That's where I would say there's a difference between the old-fashioned approach of Anthony, who's got a very successful business, and your business of an online marketplace, because you can be anywhere.
We can. So what technology allows us to do is to collect data quickly and efficiently, to analyze that data quickly and efficiently, and to distribute the end product quickly and efficiently.
What's your view on blockchain, and how will it affect your business?
There's a lot of people I think are looking at blockchain for peer-to-peer lending because they somehow think it's going to be better. I was slightly concerned about the speed that blockchain can actually transact at. So that would be my sort of maybe one of my concerns. But I think the fundamental underlying technology I think is fantastic, and I think there will be, if somehow we could get the land registry onto blockchain, that would be a really interesting and a massive development for property in the UK.
That was not a leading question, but as you bring it up, click to purchase, which, as you know, is something which we developed, as a way of executing properties online, in October last year became the first business whereby a property was executed online by an agent and immediately recorded in the blockchain ledger. The government, on the 23rd of January this year, they put out a press release and it said, HM Land Registry moves forward with digital conveyancing. The government approves changes to the rules that will enable future digital services. There's no question that the government are looking at putting the land registry into a blockchain register. Yeah. And that will allow contracts such as those that we produce at Click to Purchase to feed automatically into the land registry. I don't think it's going to happen overnight. I think it's going to be a slightly slow process because you're dealing with government bodies. But it's certainly coming. And I think that what's going to happen is that somebody will be able to identify a property, buy it online at Click to Purchase or another competing platform, even though there isn't one at the moment, and press a button, select Proplend to take a loan. Their KYC will be cleared by an API from another blockchain database, and the money will flow like that. They'll exchange contracts and they'll know straight away that there's a loan coming across, and then in time it'll just feed as a completion into the land registry. And I think this is where the world's going, and I think it's going to happen far, far quicker than people realize. People say 10 years. It's not 10 years. This is far, far quicker. I would say a year ago no one had heard of blockchain, and now everyone's heard of blockchain, except the bloke I had breakfast with today, who I won't mention. Okay, so that, I think, rounds it up. That's a really interesting session. And I think it's really interesting to hear the difference between Anthony's business and Brian's business. I want to thank you both very much for giving up your time. What I would say to anybody watching on a Google Hangout or listening on the podcast, it would be my pleasure to introduce you to our guests if you think you can help them or they can help you. If you would like to buy properties in Scotland, of course, we have our man in Scotland, Graham, who is always available.
Always available.
And if you want to do any transactions in England, please contact me, Dale, Richard, and we'd be delighted to help. So that's, I think, has anyone got any other final words of wisdom?
Thanks for having us.
Thank you very much for doing that.
Okay, thank you very much, Anthony.
Have we done the question, CPD?
Oh, the CPD question. All right, the CPD question, you're quite right. My CPD question, if anyone asks, in order to get your certificate, you have to tell me what is the current price of Bitcoins, which is $8,421 per Bitcoin. So, thank you, Anthony.
Pleasure, thanks.
Thank you, Brian.
Thank you very much indeed.
Thank you, Dale.
Thank you.
Thank you, Graham.
Bye-bye.
Thank you, Richard. And for me, Neil Singer, have a lovely weekend. And remember, don't forget, if you want to sell properties, singerviellesales.com. Thank you very much. Bye.